Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 24th of April. Markets have remained volatile. There's probably a twin set of ideas which the market is considering at the moment. On the one hand, of course, in the US in particular, we are now into first quarter earnings season, and there's been some compression of margins as expected, a slight concern around profit outlooks which haven't really been forthcoming. But generally speaking, of the few companies that have reported so far, especially the banks, there have been a beating of expectations, although admittedly those expectations were fairly low. At the same time, of course, the other thing in terms of the US is the potential for recession. Recent economic data has been softening, including the jobs market, and yet one more rate rise is at least is expected in May from the Fed. The lag effect of that, of course, which we won't see for another 3 to 6 months, is whether that pushes the US into recession, and if it does, how deep that recession might be. So clearly there are overhangs on the market. That being said, the main indices have managed to keep their heads above water, and in the year to date, the Dow Jones is up 1.9%, the S&P 500 is up 7.6%, the Nasdaq is up by 15.2%, and the FTSE 100 is also continuing to hold steady, up 6% in the year to date. Turning to next week, in the UK, the first quarter earnings season really does get into full swing, and for the banks in particular. We're going to get first quarter numbers from Standard Chartered, Barclays and NatWest. And of course, there are a number of things to look out for. The recent banking turmoil doesn't seem to have overly upset the US banks, and that should probably read across positively to the UK. By the same token, any deterioration in economic decisions, especially the potential for bad debts, could result in further loan provisions. So that's something to look out for on the UK side. Needless to say, net interest income should also be a positive given the rising interest rate environment in which we find ourselves. And of course, as usual, shareholder returns and any announcements in terms of increased dividends or indeed share buybacks. The recent banking turmoil has left some of the banks in the UK nursing some wounds, but if you look on a one-year basis, generally speaking, the picture is a bit more positive. Standard Chartered are up 25% over the last year, Barclays 4%, NatWest 12%. Also, first quarter updates from the pharmaceutical companies, Glaxo and Astra. Increasingly in the space, there tend to be rather specialised acquisitions as opposed to the traditional R&D departments of the past. Certainly in terms of these two companies, they've had differing fortunes. Glaxo down 32% over the last year, Astra up 15%. Also, full year numbers from Sainsbury, pretty good Christmas. We know about the ferocity of competition in the supermarket space. Vague big chatter around Sainsbury's, as there has been for a great number of years now. Shares are up about 16% over the last year, but outlook from them will be as interesting as any moves there might have been in market share. And finally, Associated British Food. Obviously, the main driver here is Primark. We've seen some weaker retail sales numbers coming through in March, which could impact either current trading or outlook on the basis that Primark had been seeing quite a big return of customers to stores. Nonetheless, the shares have managed to post a gain of 24% over the last year, and the outlook from AB Foods and Primark in particular will receive particular scrutiny. Thank you for watching. Have a great week.